everyone, and welcome to my morning report analysis videos on Friday 9th of March with me, Rich Perry, market analyst at Hantec Markets. We've got payrolls today, non-farm payrolls, so the markets have a little bit in consolidation mode really in front of that, but we have had an improvement in risk appetite yesterday, which or overnight as well, which has started to sort of turn the dollar around. We had the ECB meeting yesterday, and the euro was talked down by Mario Draghi pretty successfully, has to be said, and the euro dropped quite sharply on the back of that. But then subsequently we've had the announcement from the US that there would be trade exemptions for Canada and Mexico, and the fact that other countries could possibly apply for trade exemptions as well from Donald Trump's tariffs. And subsequently that sort of diffuses to an extent the whole prospect of protectionism arising from these trade tariffs. So subsequently the dollar has benefited from that, and also safe havens have fallen back. Also we had overnight the news that Kim Jong-un is sort of going to be organising a summit with President Trump as well to talk about his nuclear program as well. So it's all sort of playing into a more positive risk sentiment as we've come into payrolls. But you can see the dollar jumping yesterday, consolidating a bit in front of payrolls, which is going to be the main focus of the day today. Gold lower, back below 1320 as well. Equity markets rebounding a bit yesterday as well. We had the S&P of 100 closing higher, and also the European markets were positive yesterday, just consolidating in front of payrolls today. Now payrolls is clearly the big focus of the day. However, we've had the UK industrial production numbers which have missed estimates by a slight amount, and subsequently sterling fell a touch, but generally speaking the markets will be sort of looking out for payrolls, which is the big focus at 1:30 this afternoon. Payrolls expected to come in line actually with last month's 200,000, but the big number that everyone will be watching will be these average hourly earnings, expected to dip slightly to 2.8% from 2.9%. That big jump to 2.9% caused the markets panic last month. Is average hourly earnings going to hold up? Well, it's expected to be 0.2% on the average hourly earnings month on month, which would push back the year-on-year data to 2.8%. Also watch out for U6 unemployment. That's risen for 3 months in it's actually risen 2 months in a row. So will it rise again? Again, that would sort of point towards sort of full employment being sort of there or thereabouts reached, and that would be a driver of average hourly earnings going forward. So lots going on today, payrolls day. But my chart today is Euro Aussie. Now, as I said, the euro had a bit of a stinker yesterday on the back of Mario Draghi talking it down. Even though the ECB removed its easing bias, Mario Draghi fairly successfully talked down the euro yesterday. And what we have seen is Euro Aussie coming back into this range, this old range, which broke out above 158 figure, targeted 160 from a 200 pip band. Almost got there, didn't it? 175 pips on that target on the upside before turning around. Bearish candle yesterday and continued to the downside today. It looks like the market has rolled over near term. Momentum indicators have lost their impetus to the downside, now developing. Now it could come back sort of mid area of this range. You look at the hourly chart, you've seen the market sort of rolling over, forming this little top pattern below 58.20. You could argue that measures around about sort of 150 pips to the downside, and that would be sort of 56.70. So that would be sort of mid-range of this old range, and the market sort of moving down subsequently this morning. Sort of that support, old support of 58.20 becoming resistance today before the market's fallen back. You've got support initially at 57.10 and then 56 sort of 20, 56.10 area. But payrolls is going to obviously have a factor into this market, but you've got a more corrective configuration on the hourly, with the MACD lines failing at neutral, the RSI failing at 60 and rolling over. So more of a corrective near-term configuration. I think that it would likely to be ultimately a chance to buy. I'm bullish on the euro medium to longer term. You could see a bit of a corrective move that anything around sort of 56 to 56.50 I think would be a decent buying area on euro Aussie going forward. But for now, we're looking corrective. So I wish you good luck in your trading today on Non-Farm Payrolls Friday, and I'll speak to you later.